Expect another roller coaster ride on Wall Street today. CBS News correspondent Priya David joins us now from the New York Stock Exchange with the latest. Good morning, Priya.
Well, Julie, good morning and congratulations to you. Your belly may be growing, but here in the market, it's shrinking. After a 6-week rally, the market appears to be retreating again. The Dow shed almost 300 points yesterday, and overnight, Asian markets plummeted. The Nikkei lost 2.5%. The Hang Seng dropped 3%. Even positive first quarter earnings reports don't seem to be enough to stop the slide, as U.S. investors are increasingly concerned about the health of America's financial system.
Banks may be churning out first quarter profits, but their stocks are dragging down the markets. Bank of America announced it had tripled its profit from last quarter, but its stock plunged 24% on Monday. Citigroup was down 19%, and JP Chase nearly 11%.
We've got a lot of write-offs to come, and there's not going to be as much of a pop in bank earnings this year as a lot of people expected. There are clearly some banks that aren't out of the woods.
Which could mean more federal aid, but instead of asking Congress for additional tax dollars to cover future losses, the Obama administration may swap its existing loans in banks for common stock, which means government ownership in the banks. Meanwhile, a report out today says taxpayers are increasingly exposed to losses, and the government is more vulnerable to fraud under the $700 billion Troubled Asset Relief Program known as TARP. The government report to Congress finds the private-public partnership designed to rid banks of their toxic assets favors private investors over taxpayers.
Now, as far as toxic assets go, a new report from JP says there could still be another $400 billion in bad loans on bank books. And that would mean those banks would still need more government aid. Julie.
CBS's Priya David at the New York Stock Exchange. Thanks, Priya. Joining us now is Art Cashin, who is Director of Floor Trading Operations at the New York Stock Exchange for UBS Financial Services. Good morning, Art.
Good morning to you.
What do you attribute yesterday's big plunge to?
There were actually four things. A little bit the Bank of America. There's also great concern over the new proposal to convert, not let the banks pay back the TARP funds and convert that to common stock, making the U.S. government possibly the largest shareholder in the 19 largest banks. Secondarily, over the weekend, there was a Fed conference down at Vanderbilt University, and former Chairman Volcker was rather critical, or at least that's the way it sounded, of some of the current Fed policies. That raised questions about Bernanke's reappointment as chairman early next year. And then finally, there were rumors around about a study showing that 16 of the 19 banks might not be able to pass the stress test and might have too many bad assets, as we just heard before. That combination was enough to wilt the market very badly.
What a combination. So yes. In light of all that, what can we expect today?
Well, I think you're going to still have nervousness. That was like being served the breakfast of a toxic omelet, if you would. And there's going to be a bit of a hangover, I suspect. The nervousness will continue. We really need some clarity as to what the government plans are relative to these TARP things. Are they going to take the taxpayers' money back by letting Goldman and JP pay things back? Or are they going to convert to common stock, and then where do the tax holders stand? So the confusion shouldn't make for a very bright day today.
We will stay tuned. Art Cashin, okay. Thank you, Art.